Events Company. Financial model with a 5-year DCF, discounted cash flow, and valuation offers a complete financial analysis for a startup in the live events industry. It includes projections for event revenues, sponsorships, licensing, merchandise sales, and operating costs. The model supports key decision-making through detailed feasibility metrics and provides pro forma financial statements, net present value, NPV, internal rate of return, IRR, and payback period analysis. Key components: revenue streams, income from ticket sales, sponsorships, licensing agreements, merchandise, and other event-based revenue. Direct and operating costs includes detailed costs for event execution, staffing, marketing, logistics, and overhead. Capital expenditures, investments in equipment, IT, and furniture required to launch and scale operations. 5-year DCF and valuation, long-term cash flow forecasts with DCF valuation, terminal value, and investor metrics. Pro forma financial statements, full forecasted income statement, balance sheet, and cash flow statement. Break-even analysis identifies the time to recover initial investment based on projected cash flows. Scenario and sensitivity analysis includes base, high, and low cases with adjustable growth and cost assumptions. Key benefits: investment feasibility, evaluate ROI, IRR, and NPV for investor decision-making and business planning. Operational clarity, understand cost structures, cash burn, and funding requirements. Scalability, insight, forecast performance as the number of events, sponsors, and merchandise sales grow. Professional reporting, investor-ready output with KPIs, graphs, financial ratios, and valuation multiples. So, a quick overview of the model. In the Contents tab, you can see the structure of the model, and by clicking on any of the headlines to be redirected to the relevant worksheet. On the Manual tab, you can feed the general information for the model, such as project name and title, responsible, timeline of the model and date and currency conventions. Additionally, there is a description of the color coding of the model in the same tab. Inputs are always depicted with a yellow fill and blue letters. Call-up, that is direct links from other cells, are filled in light blue with blue letters, while calculations are depicted with white fill and black characters. There is also color coding for the various tabs of the model. Yellow tabs are mostly assumptions tabs. Gray tabs are calculations tabs. Blue tabs are outputs tabs, that is effectively results or graphs. And finally, light blue tabs are admin tabs, for example, the cover page, contents, and checks. In the Summary tab, you can see a high-level report with the main metrics and value drivers of the model. It can be readily printed on one page for your convenience. In the Outputs tab, everything is aggregated here into the relevant statements, profit and loss, balance sheet, and cash flow. Moving to the Valuation tab, a valuation is performed by using the free cash flows to the firm, and then a series of investment metrics are presented: net present value, internal rate of return, profitability index, payback period, discounted payback period, sensitivity analysis. In the Graphs tab, various graphs present the business metrics, revenues, operating costs, and profitability. Then multiple charts present the working capital, debt, and equity, along with cash, assets, and cash flows, which results in a valuation on a project basis as well as on an equity basis, together with the feasibility metrics. Checks, a dedicated worksheet that makes sure that everything is working as it should. Important. Notice, yellow indicates inputs and assumptions that the user can change. Blue cells are used for called-up cells, and white cells with black characters indicates calculation cells.